Well, ladies and gentlemen, my name is Greg Michalowski for ForexLive.com, and I'm going to talk to you a little bit about the Reserve Bank of Australia interest rate decision that's going to take place at 12:30 a.m. Eastern Time, 4:30 a.m. Greenwich Mean Time. Also going to go through the key technical levels. First things first, the Reserve Bank of Australia is one of five central banks who will be announcing interest rate decisions in this week. We have the Reserve Bank of Australia, we have the Bank of Japan, we have the Bank of Canada, we have the Bank of England, we have the ECB, all expected to keep their rates unchanged. Now, ECB may lower their rate, or there's talk about them lowering their rates. But that's probably more of a long shot, more of a play by the central bank economists just in case. Doesn't seem that that's going to be the way, but you never know. But let's focus here on the Reserve Bank of Australia. No change expected as far as their interest rates go. If we take a look at the last statement that they made, since that time we've had a unemployment rate which moved up to 6.4% from 6.1%. So they may talk a little bit about the labor market here. Now, in his testimony just a week or two ago, Governor Stevens sort of dismissed that move to the upside, but he did say that the labor market will probably be some time before we start to see declines in the unemployment rate. So I would expect more of that wording to occur here. The other thing that they talk about here that will be of interest to the market is the exchange rate. In last month's statement, they said the exchange rate remains high by historical standards, particularly given the declines in commodity prices, and hence is offering less assistance than it might in achieving balanced growth in the economy. In his testimony, he talked of the possibility of intervention, although they would never telegraph it. But it would be interesting to see if they include any sort of change in wording toward that idea, or maybe more strongly word the exchange rate sentence or so to reflect a jawboning type of a way to move the Australian dollar further to the downside. I don't know. We'll see. That's going to be a focus for traders in these statements tonight. The final sentence here, inflation, that's not the one that I was looking at. I was looking at the final sentence right here on present indications. The most prudent course is likely to be a period of stability in interest rates. I don't think there's going to be any change in that statement whatsoever. It's going to be, I don't think there's going to be much in the overall statement, but you never know. And whatever we don't know and what the what the market interprets is going to determine the bullish or bearish bias here for the currency pair. I'm going to start off not by taking a look at the hourly chart, but a daily chart, and we're going to look back to August 4th. That was right here. On August 4th was the last August 5th was the last interest rate decision, and during that time, the period prior to it, the market was trading above and below this blue line, which is the 100-day moving average. I think it was like 7 straight days where the market ended up trading above and below the level, indicative of a market that doesn't know which way it wants to go. And lo and behold, the last 4 days of trading, the market's been trading above and below the 100-day moving average once again. So again, we're at this point where the market has positioned itself for any sort of surprise that may happen. If they're more hawkish, you're going to see the price move above the 100-day moving average, and I'd expect momentum to take it in the upside. If the statement is more dovish, I would expect the market to move away further to the downside, away from the 100-day moving average. And on either extremes, we have other levels of importance. Off this daily chart in particular, the highs for the month of August came in about the same level, around the 193.73 level. So if we get above the 100-day moving average at the 93.38 level, where the 100-day moving average is, we'd be looking for a move to and through the high price right here. That would be the confirmation move through the 93.73 level. If it gets above that level, then we're going to start to target higher levels up here, including the 94.38 level or thereabouts, where the topside trend line comes across. That's the bullish case. That's the more hawkish case if there is a hawkish case from the Reserve Bank of Australia this month giving the fundamentals. On a more dovish side, a move below the low from yesterday's trade also gets us below the 200-hour moving average. I'm going to transition to the hourly chart here. And you see this green line right here? That equals the 200-hour moving average. Now, the low in yesterday's trading came in the first hour of trading, and that occurred at the 93.21 level. And so this 200-hour moving average is just a few pips away from the low from yesterday. Also a few pips away from the 38.2% retracement of the move up from the August 21 low to the high that we saw on August 28th. So this area right here, 21 or 21.8 was the low price yesterday, 20.8, which is a 38.2. 200-day moving average at 19.8. 19.8 to 21.8. Get below that level, and that opens up the door for further downside potential for the Aussie versus US dollar. Off this hourly chart, 93.04 is a 50% retracement. I'm big on the 50% retracement levels, and that would be close to the bottom side trend line of this channel right here. So get below 93.04 opens up the door for further downside for the Aussie versus US dollar. So 93.19 to 21, 93.04 and below, then starts to move toward our lows for the month of August, which came in around the 92.36 level. That would obviously be another target on the downside, as would the low price going all the way back to these days right here. The low price over the last 1, 2, 3, 4, 5 months has come in at the 92.01 level. So getting below that level would open up doors for further downside. Another key level to consider on the downside is this 38.2 and 38 and 200-day moving average coming in at 91.81, and then the 91.77 is a 200-day moving average. So the path to the downside is very clear. The path to the upside is clear as well. Get to the top, get to this level right here, start to take out other high levels, including the high for the year at 95.04, and we're off to the races there on the downside. Again, move away from the 100-day moving average. All of it focused around this 100-day moving average. Either we move above it or we move below, but look for momentum away from that 100-day moving average and trading after the decision. All right, that's it. My name is Greg Michalowski for Forex Live, and I'll talk again tomorrow. Bye-bye.